Hey everyone, it's Benny the Finance Dog. Welcome to my channel. Today, I'm going to be taking a break from my usual trade reviews, still doing education, but giving a better prediction on what I believe will happen tomorrow in the market. So hopefully you're watching this before the Fed announces their move at 11 and Jerome Powell speaks at 11:30 Pacific Standard Time. Let's start with the education piece first. As we continue talking about indicators, today I want to talk about my most commonly used one, at least for long-term swings and on higher time frames, the exponential moving average indicator, or EMA. The EMA is a type of moving average that places a greater weight on recent price data by taking the averages of a set number of candlesticks and plotting a line so that it is visible what the average is at quickly looking at the chart. Many EMAs are used by various traders on different time frames. The most popular ones I know of are the 9, the 20, the 50, the 72, the 100, and the 200. Now, plotting all of these EMAs is way too much for your chart. I would literally just stick to the 9 and the 20 for smaller time frames and the 72 and the 100 for your daily and weekly time frames. EMAs are great because they can be used to help identify and justify various trends and support and resistance levels. They also are used by some traders to generate buy signals as well as sell signals. For example, a trader might buy a stock when the EMA crosses above the 50-day moving average. However, it's important to remember that EMAs are just indicators. They're not perfect, they can't predict the future, so it's important to use them in conjunction with other technical analysis tools and your own judgment. Some other points to remember about the EMA: it is a lagging indicator, so all the data are for the previous candles and not taking into consideration the current candle. And it's also good to assume that the EMA is not a fortified wall that prices cannot go through, but morely just a suggestion of average prices based on recent price action. Now that we've finished talking about the EMA, I'd like to talk about what I believe will happen tomorrow with the Fed meeting. I believe, as many others do, that Jerome Powell and company will come out and announce at 11 that there will be a pause in rate hikes with a potential for another rate hike in July, though that they will have to compound the data and see. I think this lends itself also to a potential multi-meeting pause, and if we get that announcement, then a strong, strong rally. With this information, he could also hike interest rates at this particular meeting, which would cause a market crash, in my opinion, since that's not priced in. He could also announce that even more hikes are needed, though I think we have a very slight chance of this happening given that the economic data in today's CPI report was positive and indicated that things are going to plan so far based on the rhetoric we've gotten from Jerome Powell. As it applies to Apple in particular, I think that we have potential to see a move to the upside pending this news in the morning. I think that as traders pile in and place their bets on the FOMC, we will see a slow but steady rise as we head towards the 11 o'clock announcement. And then we will see a quick pop up at 11, though it'll quickly return down by 11:30, and we could see a lot of volatility in that 11 to noon hour. At 11:30, where Jerome Powell starts speaking and answering questions, very much hinges on what he says, where the market is going to go. But I think for particularly in Apple, if we do see the market shoot up based on something positive that Jerome Powell says, like a continued pause, maybe for multiple Fed meetings, we could see Apple break above the 184.50 level as well as the 185 major psych levels. We could see a pop up and a test of 185 because that's the next psych level above major highs as we move towards 85.50, 86, maybe even as high as 87 or 80 or even 190, though I do think it would be quite a stretch for us to have that big of a move. Jerome Powell will have had to say something incredibly positive. That's my outtake for tomorrow. None of this is particularly advice into what you should do. Please consider your own risks when trading. And if you are a novice, I definitely would recommend sitting tomorrow out. That being said, we're in for, in my opinion, a pretty volatile day tomorrow, and hopefully we can risk manage ourselves into some solid profits. But remember, if you are going to trade, please react to the news as opposed to anticipate it, and make sure you come back tomorrow for my recap on how I did personally, as well as some additional education. Thanks for watching. Make sure you like and subscribe for additional content. Woof woof.